During this video, you are going to get an insight into how your family might be able to achieve a staggering 115% tax saving. The reason I created this video is because I've found so many families in the UK that could be taking advantage of this approach but simply don't. So by the end of this video, you should achieve a good understanding of the strategy, how it applies, and what the rules are. As always, it's important that you understand this video is based on my understanding of the UK tax rules as at September 2021. And as you know, those can always change. Also, this advice is general in nature and may not be appropriate for you given your specific circumstances. That said, let's get started with an example. So let's assume you as the adult child have an adjusted net income of £125,000 and you have a parent who has £20,000 of surplus income each year. So scenario one, if you don't do anything, the inheritance tax bill for your parents' excess income would be 40% of that £20,000, which is £8,000, while you would have effectively paid 60% taxation by losing your personal allowance. Therefore, your tax bill for the income you've got above the £100,000 would be £15,000. The net income for anything you're earning above the £100,000 at £25,000 is actually reduced to £10,000. So overall, for the family in this situation, there is no tax relief. So let's look at scenario two, if you apply exemptions and allowances. First, your parents can potentially gift the excess income to gain an inheritance tax exemption. So what you're going to do then is effectively take that $20,000 divided by 12, then have them put that into your pension per month. So that's £20,000 net going into a pension. Because we're using that excess income inheritance tax exemption, this comes straight out of your parents' estate immediately. So the inheritance tax bill for that year for the excess income then becomes zero. Now let's have a look at the impact on your tax and the tax relief you can receive from that gift. So on the tax return, so instead of having a tax bill of £15,000, you actually end up with a tax bill of only £5,000. Effectively, because we've moved all that income now down to 40% and you're not losing the personal allowance, 40% of £25,000 would be £10,000. But again, because of the factors of pension contribution of £20,000 net or £25,000 gross has been made by your parent, that means that you can claim £5,000 back in your tax return. So instead of having £10,000 from that income above £100,000, you've ended up with £20,000 in your bank account. That's how the whole family will benefit from the 115% tax relief. Because in summary, your parents have given away £20,000 of excess income, generating the relief at source pension benefit with a reduction of their tax bill and a reduction in the inheritance tax bill. This all works out to be £23,000 of tax savings from £20,000 given away by your parents. So overall, it's effectively the one gift providing three benefits: inheritance tax planning for the parents, a tax reduction for you as the child, and an increase to your retirement savings by £25,000. I hope you enjoyed that video, and to see more like this, please hit the subscribe button below, and please leave me any comments about what you liked or didn't like. All the best, and I hope I'll see you again soon.